Well, newsflash, the healthcare system is broken, full stop. And obviously the financing of that, which happens with health insurance, either fully insured or self-funded, is also struggling. As we headed into 2026, the year we're in now, it's a pretty hard market.
We're heading into a massive year for ICHRA, and today we're joined by Paul Ashley, who's the VP and Consultant of Corporate Benefits at NFP and a fellow podcaster. If you're an employer just waiting to see what your 2027 health plan increase is going to be, it may not be a pleasant surprise. A hard market is here, and you need alternatives now. Good morning on this blistery day in Indianapolis. The
air is crisp and clear and dry.
I guess I'll introduce you and you fill in where I missed.
Sure.
But Paul Ashley, leader with NFP Indy office.
That's right, yeah.
But been in the benefits consulting space for as long as I've been.
Almost a quarter of a century.
Right.
That's how old I am.
How experienced you are.
Well, maybe.
Really kind of want to start with, obviously, crazy year within the health insurance kind of world. I mean, both on the group side and in the individual market, with just kind of rate increases and just general news, kind of, I think from a carrier perspective. So there's no shortage of problems to solve as a benefits consultant, which I think is good job security. But would love to kind of just hear, we were chatting in advance of this podcast, just kind of what keeps NFP kind of edgy and some of the alternative solutions that are top of mind for you and your team as employers out there, really just looking for potential solutions when kind of the health insurance market has just been a challenging market.
Yeah. Well, newsflash, the healthcare system is broken, full stop. And obviously the financing of that, which happens with health insurance, either fully insured or self-funded, is also struggling. And you said it best when you talked about, as we headed into 2026, the year we're in now, it's a pretty hard market, right? And that can be hard from fully insured premiums on the fully insured group side, stop loss market access for self-funded plans where the insurer sort of acts as their own insurance company, buys the financial protection of stop loss. Those markets are hard right now. And I have a pit in my gut. I see it from NFP's actuaries, kind of how they're helping us project in our financial analysis. As bad as we thought 2026 was, and it was bad, I feel like we should buckle our seatbelts, and the 2027 renewals might be a little bit worse. So we, with our clients, there's no shortage of problems to solve when it comes to that and total rewards. And so we're working to push our clients is not the right word, but expose our clients to the spectrum of solutions. There's lots of ways, alternative models that they maybe haven't thought about before, but now they kind of have to be more open to it. And so our job as advisors is to educate them on all possible pathways and then help them eliminate or winnow down to what is the pathways that might make the most sense for them. And so, ICHRA is a good example. We have to tell all our clients about ICHRA of all sizes. And I think historically folks would say ICHRA was, it's a down market solution. It's only for small businesses or nonprofits. Well, sure, it's for them, but the growth has come up market. Hundreds, if not thousands of lives of size employers are exploring and implementing ICHRA. And that's a change. Right. And why is that a change? Because the market is so hard and they have to look at alternative models.
It's also crazy too. Like when in my perspective, I've been selling now ICHRA for 2 years. When a small business evaluates ICHRA, it's so different than when a mid-size or large group evaluates ICHRA, because a small employer, say 20, 25 people on a health plan, like they're evaluating ICHRA and they're looking like person by person. Who's going to be impacted on this change to ICHRA? What choice are they going to have? What would average premiums be with the individual market plans being age rated? Like that actually is a very much a person by person kind of decision that many times a CEO or whoever's leading the HR function will go through that, versus like as ICHRA's shifted up market, like the more of the multi-hundred, like our largest clients got 4,500 eligibles that we serve now. Like it's such a different evaluation where you're not doing it person by person, and you've got
you can't
employees scattered in many, many states. So like it's just it's also just such a different type of evaluation. So it's like kind of a fun thing for like me to be in and see the ICHRA market start to mature. I think we're in the maturing process. It's not mature in any way, but
I was telling somebody earlier that it used to be in its infancy, and now it's enrolled in kindergarten, right? Yeah. ICHRA is a kindergartner, getting its legs underneath it, getting some assignments. It's stabilized, but still maturing, right? I mean, it's a not yet mature market, unfortunately, but also opportunity exists there, I think.
Yep. So, drill down on this topic before we kind of shift gears. So, ICHRA is definitely an alternative type solution. Mm-hmm. What are some of the other alternative solutions that you're seeing as kind of other good options for groups when they've got to look at something different than traditional fully insured or self-funded plan?
Yeah, so a lot of folks shifting out of fully insured into self-funding. So that for them, that would be an alternative model. And then within that self-funding world, there's just things open up wide to you. You could be part of a captive to place your stop loss with other like-minded employers. That's kind of an alternative way to do stop loss. You could go direct to the market. You could you could do things around cost containment that you simply can't do on the fully insured side, like specialty RX cost containment, because some of the biggest growth in healthcare spend for plans is because of RX. It used to be that RX would make up 15, maybe 20% of the claims cost.
Yep.
Fully insured or self-funded. Now you're starting to see it be 25, 30, 40, 50%.
Yeah.
And growing. And it's amazing because some of the solutions we now have to cure diseases and treat diseases that didn't exist years ago are there. Yep. Awesome. At a very expensive price. And so what are ways that you can bend that cost curve on the fastest growing part of claims, which is RX? So you see a lot of alternative models there.
Yep.
You also see reference-based pricing, which is something that you can really only do in the self-funded world. It's essentially where you decide we don't have a network in the classic sense. We're not using the BUCA, right? Blue Cross, Cigna, Aetna, United. We're not using those big national networks or even a local network. We are basically saying as a self-funded plan, we reimburse at the Medicare level plus some percentage.
Yep.
And what that does is it cuts the net claims paid down by 20 to 50%.
Yep.
Challenge it creates is those providers that folks are going to have not agreed to accept that as payment in full. So there can be a balanced bill situation.
Yep.
So folks talk about ICHRA being disruptive, and it is.
Yeah,
it's a change in model.
Yep.
You also have the other end of the spectrum where you're still offering a group plan, it's self-funded, and you're using reference-based pricing. It's like, well, that's disruptive too. It's like, which disruption are you willing to wrestle with? And some would argue RBP is better.
Yep.
Some would argue ICHRA is better in terms of least disruption, and both are right and both are wrong. It just kind of depends on who you are and what solution you want to put in place.
The illustration I love to use is like, as I meet with consultants like yourself, but also get access to CFOs, CHROs that are evaluating this change to ICHRA. Many times, ICHRA can drive good financial savings.
For sure.
But it's almost just like we're in January. Like I'm still very focused on my New Year's resolution, which is
you haven't given it up yet.
Health focus. I'm not giving it up yet.
One month in, and you still got it.
I'm working toward kind of some weight loss goals myself. Of just like kind of managing kind of what I eat and working out. But like it's very similar. Like I can't expect change or to get different results if I don't drive changes. Right. And like, I think any of the alternative solutions are very much like that. Like
Absolutely.
If you want to lose 10 pounds, you've got to change the way you eat. You got to be better at working out. Like there's changes you have to make. Same thing is true for if you're a health plan and you need to save 10, 15, 20%, like there's going to be some give and take there. And like if you find good partners, like there's good reference-based pricing vendors out there.
There's also bad ones.
There's bad ones. I like to think Remodel's a good ICHRA administrator, and there's other good ones. Like you've got to be paired with partners that can help you navigate that change, which we'll, I think, get into here in a bit and just kind of talk through some of the just the friction that moving to an alternative model can cause to get some of the reward that I think these employers are going after.
Well, one, and this kind of circles back to the thing you said about larger employers and the way they analyze ICHRA, it just has to be different just because of scale and that sort of thing. The thing I didn't expect, right? You being 25 years in the industry, I'm still learning.
Yep.
And if you're not learning, you probably should get out of whatever industry you're in, by the way. Pro tip.
My wife challenges me every day. She says, hey, how did you
What'd
use
you learn today?
ChatGPT today? No,
Oh.
that's her question. She's like, there's so many things in your job you should be using AI for.
Absolutely.
I'm like, that's a great challenge, honey.
That's a good one. The thing I didn't expect with larger employers is, so especially if they're multi-sided, multi-state, one of the challenges that large employers have when they offer a group self-funded or a group fully insured plan is they generally are choosing one network. And it's one of the BUCAs again, right? It's a national network,
Yep.
United Healthcare Choice Plus, Blue Cross Blue Shield, Cigna, whatever makes sense. Sometimes if they're large enough, they can do a patchwork of networks that are regional.
Yep.
But that you have to go way up market, 5,000, 10,000 plus. What I didn't realize is ICHRA solves a problem of we've chosen X national network, but in this state, they hate it. And in
Yep.
this state, they love it. In this state, they hate it. In this state, they love it.
Yeah.
ICHRA solves for that and says, great, we're going to put the choice of the network back in your hand, not at the individual office level, but at the consumer level.
Yeah.
You like Blue Cross Blue Shield, go for it. You like Ambetter, go for it. You like Oscar, go for it. It's that choice architecture just explodes to be open.
Yep.
And it takes the pain out of, well, we chose X national network and you hate it.
Yep.
That is now your choice.
Yeah.
And it's sort of a dumb moment. I'm like, oh yeah, that solves that problem. Now there's other downstream consequences that you have to work through, but that's a huge reason a larger multi-state employer might want to choose ICHRA.
Yeah.
Because they're not quite large enough to do multiple networks. Again, you have to be pretty big to do that. If you're, 200 to 5,000, demanding that is tough.
Yeah.
The ICHRA lets you get it.
Yep. Yeah. My favorite example of what you just described is more regional carrier specific, but we've served a lot of groups over the years that were fully insured with Kaiser.
Okay. Yeah.
So,
out west or
Kaiser out
Mid-Atlantic.
west in Oregon, Washington, Colorado. They've got Georgia as well. So like they're and more than just out west, but like in California. But like an employer that's fully insured with like a Kaiser, what we find most times is Kaiser's a traditional, more HMO style plan. Like 80% of the employees, they love it. Like they're totally fine with Kaiser fully insured, but the other 20%, like they hate that they've been kind of, hey, Kaiser's the option. So ICHRA is like this magic solve for employers that are multi-hundred that aren't big enough again to go get multiple networks that have offered maybe just a Kaiser fully insured plan for years and years and years. Well, when that fully insured plan, like when cost becomes a challenge, all of a sudden, ICHRA is a magic solve because Kaiser also has individual plans.
Sure.
So that same Kaiser network and plan that the 80% of people have loved, like they still have access to that.
Yeah.
But then all the other carriers that people have wanted, like out west, I'll nerd out for a second, like Pacific Source and Regents and some of those carriers that maybe people that live out in that area have wanted, like they now have access to the other carriers for the first time. So like the true choice in that scenario for those larger employers but aren't large enough to do what you said, like it really does open up like a totally new world.
Sure does.
For employees. Yeah,
that's one of the like if an employer is thinking about, well, is this for me? That could be if you've heard that feedback.
Yep.
I don't like the network because I'm in X state. Well, this could be a reason to explore another reason to explore ICHRA other than just cost containment.
Yep.
Right. Choice architecture then becomes part of why you might do it. So, we're constantly listening to our clients about what problems are they trying to solve. And then our job is to be experts on the pathways and help match that and help them either focus on or eliminate what solution might make sense. And back on the group side, another alternative solution is doing more narrow high performance networks.
Yep.
You mentioned Kaiser. That's kind of how they've contained costs on the West Coast. Kaiser is predominant. Yep. You can say Kaiser's good or bad. It does solve a problem, which is trying to direct people to high quality, lower cost healthcare.
Yep.
Great. When it works, it works. If it doesn't, it doesn't. It just depends on what you want to do. Now in the Midwest, where you and I are sitting, the idea of a narrow network has been rejected a little bit, but I do feel like that is back on the table with these cost containment needs that folks have on the group side to look at high performing, more narrow networks. Not that you can choose, if in the state of Indiana, if you have Anthem, Blue Cross Blue Shield, or United, you really don't exclude anybody. I mean, not everybody's in network, but
mostly everybody.
You have to work hard to find somebody out of network. Like you have to try.
Yep.
Well, what if we had something more high performance in nature?
Yeah.
Like Anthem, for example, has their health sync. That's their more narrow network. I wish it was higher performing and had a bigger discount.
Yep.
But the market is adapting, and we're learning from our East and West Coast friends that narrow networks aren't always bad. They're different.
Yep. I totally agree. Yeah. Remodel Health, we actually, like for our health plan for our company is an ICHRA. So we drink our own champagne.
I would hope so.
Yeah, you'd hope so. That's something our CEO Austin's been big on for years. Like Remodel's always kind of drank our own champagne per se.
You guys serve champagne here? I was only offered coffee.
Too early, Paul.
Too early. Yeah. It's somewhere in Europe. It's not
somewhere. Next time.
Yeah.
But no, like this year, I went through the open enrollment process for my family.
Yeah.
And even in the individual market, like in Indiana, there's 5 carriers that offer plans. Really, we find there's kind of 3 that people most times choose. It's Ambetter, CareSource, which are 2 individual-only carriers that if you're coming from a group plan,
that's not a household
probably
name.
haven't heard of. And then Anthem.
Yeah,
household name.
Yeah.
So Anthem historically just had, prior to 1/1 of 26, they just had one network for their individual plans. They called it, I believe, their Essentials Network. And it was really, in where we're sitting, big predominant health system in Central Indiana is IU Health. It was, in a lot of ways, an IU Health narrow network for Anthem. Well, even the carriers are starting to test, like Anthem released totally new ICHRA-specific plans this year in Indiana on a totally different network they call the Pathways Network. And by the way, Indiana wasn't the only state that they released this in. They released it in, I believe it's like 9 or so, don't quote me, but I think it's like 9 or 10 states. They released ICHRA-specific plans with unique networks that they built as they're trying to even diversify within one carrier. They still have the Essentials Network, but they also have this Pathways Network where, from our family, we're not wed to IU Health. We're more open to some of the other systems that are more of the suburban kind of systems around here. And that's kind of the plan that we chose as a family. But that's a big shift when you're coming from your employer choosing the plan and the network you've had access to now you've got kind of all of these different plans. So what I want to ask you next is, we talked about how ICHRA can drive cost savings. I would still say, like boldly, vast majority of employers that are moving to an ICHRA still, because we're in the bottom of the second inning, they're moving if there's savings to be had. But savings is not the only part of the equation. So you really, like as we talked kind of leading up this episode, it's a big shift that a business owner and HR team has to kind of get behind. Would love to kind of like hear from you. So like, yes, say there's savings on the table for an employer to make the shift to ICHRA, which I think is like the first checkbox. What else is important beyond just the risk equation for an employer to kind of make the shift to an ICHRA?
Well, I think, does it solve other problems like network access, right? Multi-state. That is clearly one that can create a challenge that ICHRA can solve for. The other thing that has to be true is, do they want to use this as a way to reinvest some of those dollars, maybe not all, but some of them, back into total rewards? Yep. So what are the other things they can do to be more generous? And what we've found is that not for every single belly button that's being covered, a lot of folks are paying less out of their paycheck when they shift to an ICHRA model, because now they have choice. The generosity of the employer through the ICHRA funding, tax advantaged, plus what employees have to pay out of their paycheck, if anything, is not always, but in many cases, typically the majority, they're paying a little bit less. Part of that's because we've given the employee choice. And in choosing, when they have control, it is somewhat surprising with that choice architecture how often they buy down a little bit. In other words, they're finding that maybe a lot of these employees were overinsured based on what their family truly needed. Even if you offered 2 or 3 options on the group plan side. And so the other thing it's doing is it's returning money direct to the employee. That's a problem it's solving, right? That paycheck erosion that can happen with healthcare inflation is being muted a little bit, hopefully not just temporarily, but for a while with this model. And so it solves that problem. I also think it allows the employer to be more proactive in how they communicate the value of total rewards and why they're shifting to this. I've done a couple of things with CEOs and key leaders where they film messages because of trying to ensure the change management is helping go well, they're actually now talking to their employees in ways they haven't. Well, that opens up a whole nother pathway of communication with employees about the value of employment. So I think it can be multifaceted if you embrace it fully. If all you're doing it, the only reason you're doing it is to save money, that's fine. Listen, I'm a capitalist. I'm okay with returning money to the bottom line, but I think there's things that you can never waste a good crisis, right? Like there's things you can do with this massive change management. You can also cascade it into other areas of the business. Yeah. And we've seen that with our clients.
Yeah. I think you hit on something that's critical for any organization making the change to ICHRA. It's like the employee education and communication side of things.
For sure.
Has to be like very thoughtful. So I've appreciated like our collaboration with NFP, Indy, and the mutual clients that we serve together, and just kind of how you guys are forward thinking as a consultant to help think through like how does this get rolled out? Like having the CEO help deliver some of the why on the front end may seem like such a small thing, but can really set the tone for a change of that magnitude very, very well. Where now employees hear from the top, like, hey, this is why we're doing this. I know it's changed. Please don't freak out. Here's why we think it can be good for you. And then kind of having even like the middle level management also feel like they're fully equipped in understanding the change, because we know that their employees that work on their team are going to come to them and ask them questions when you roll out a change of that magnitude. So absolutely. I'm super excited for like just how, from a maturity standpoint, I think the education and communication like plans that are starting to roll out for these bigger groups that are implementing ICHRA, like it's just getting better and better, and it just helps
lessons learned being applied.
Lessons learned.
I think we're uniquely blessed, the NFP Indianapolis, because the legacy firm that NFP bought 5 years ago had an established employee communications practice embedded inside our office, and then we then became a leader of that within the NFP ecosystem, and now essentially that leader of our local practice now is the national leader. So sort of quasi the NFP communications practice kind of the DNA flows through Indy. I mean, it's a national practice, but why I think that's important. And if you're choosing an advisor, you don't have to choose NFP Indy. We're open for business, but you have to choose an advisor who is willing to partner with you strongly on the communication and change management part of this. Yeah. And it's not that they're doing all the work for you. It's a three-legged stool between whoever the ICHRA partner is, like a Remodel, whoever the advisor is has to bring assets and skills, and then you as an employer. And the three of you have to come together and create a communication change management plan. Because what you're really doing is making a 180 change. Okay, well, if you change anything else in your business 180, like your finance system, you would roll it out thoughtfully. So you have to do a 7 different ways, 7 different times. It's got to be email. It's got to be in person. It's got to be talking points. It's got to be text. It's got to be landing pages. It's home mailings, like QR codes. All of it has to be, because you don't know who you're going to reach which way, and so you've got to get that out in multiple ways. Videos, like I mentioned, those are the things you have to do. You probably should be doing those things anyway in your health plan. ICHRA demands it to have success. Especially if it's multi-sided, larger. Now, if you have 35 employees all on one site and you can gather together, it's a little easier, the change management is, because you can kind of go one by one. But if you're multi-sided, multiple messages have to be disseminated, cultural differences by location, you better have a change management strategy in place that's keyed on communication. Yeah, talk to me. I'm curious now. You made me just have like a sub question. Okay, well, those are accepted. I would agree with you. Like the more thoughtful, the longer runway you have to think through the change management, communication, if you're going to make the change of ICHRA, the better. Sometimes you don't always have that long of runway, because the reality is sometimes you get a group might get a 50% renewal in their traditional group health plan, and like ICHRA ends up being like kind of what they have to do. It's almost like I always hate that, but like they're almost kind of in a corner and they've got to make a change because the business still has to make money and be able to pay its bills, and ICHRA provides savings. So help me think through like I guess, what are your thoughts on how to educate
groups early on ICHRA so that if they have to make a quicker decision to go that route, maybe quicker than they would have wanted to or thought they would, kind of what are your thoughts on some of that education throughout the course of the year?
Yeah, so we look at with our clients key milestone meetings throughout the year, and the year starts with assuming they're a January 1, and so this can shift based on their renewal date, but most of our clients are January 1 renewals.
Yeah.
In the month of January, February, maybe into early March, definitely the first quarter, we're having a stewardship meeting. And the purpose of that meeting is to reflect back on the prior 6, 12, 18 months. What went well? What were the challenges? What did we learn? And how are we going to plan our work and work our plan for the next 6 to 12 months together?
Yep.
At that meeting, we will drip a little bit of strategy. It's really more of a reflection and a little less forward-looking, but we're dripping strategy. In that meeting, we're definitely talking about the funding spectrum, right? Self-funded, fully insured, level funded, reference-based pricing, ICHRA, the whole kind of pathways.
Yep.
Planting the seed. We will then have, usually in Q2, we will have a strategy meeting where it's like, okay, let's dig deep into these options. And we are not facing a renewal yet. We can project, right? We can guess. We can use models, and we have those tools with our actuaries and our analytics team. But we're with some assumptions. If we're faced with X, Y, or Z, which of these pathways are we open to?
Yep.
That allows us then to go out to the market and begin to gather actual data in the summer so that we can show up in Q3 and start having those. Okay, you said you wanted to look at, you're fully insured today. You said you wanted to look at level funded, self-funding, and ICHRA. Here's what that could look like.
Yep.
And so we're having those conversations in hopefully August. Then they're making a decision September-ish so that we can use Q4 to really educate and implement. Or they look at it 1 year, they say no to the ICHRA, they've gone all the way to the edge, or they've gone all the way to the edge of self-funding, and we can revisit it the next year, and we've already got a head start on it. So it's constantly kind of going through that milestone loop and not waiting to the renewal to think strategically. Because if you do, you just don't have enough time.
Nope.
It's just, now, don't get me wrong, we try to keep the routine with as many clients as possible so that when the outside curveball comes in, we have a little bit of margin to quickly move somebody to ICHRA if we have to. But if we had to do that with every client, we would it would not work.
Nope.
Would not work.
Totally agree.
Be a disaster.
Get ready for AIM 2026, the premier and largest ICHRA conference in the nation. Join us May 20th through the 22nd, 2026 at the JW Marriott in Indianapolis. Over 3 days, you'll hear from industry leaders, gaining real, actionable insights on market trends and strategy, and be able to connect with the nation's leading brokers, carriers, employers, and industry innovators who are driving the ICHRA movement forward. Head to remodelhealth.com/AIM 2026 to register, and use the discount code ICHRA Exclusive for 25% off your registration. The reality is, ICHRA's still, like I say, bottom of the second inning, top of the second inning, whatever you want to say if you're a baseball or sports fan. It's early. We're in the early days. Mm-hmm. There's a lot of maturity and things that I think we all hope change. So I love asking every guest we have on the podcast, if you think 5 years in the future, what's the one thing you hope can change and mature in the ICHRA landscape?
That's a pretty easy question for me to answer because it's one thing I hope changes faster than that, but it won't. It'll take a while. I wish every insurance company that had a product on the individual market would stand up a unit that is dedicated to those who come in via an ICHRA.
Yeah.
Because a lot of these insurance carriers, they think every individual insured person or family is the same as the next. And it's a very different member consumer experience when they're flowing through an ICHRA versus when they're going direct without an ICHRA. And the carriers that have embraced the difference, I think about an Oscar as probably my primary example. They have stood up a unit that is dedicated to individuals coming into their solution via an employer-sponsored ICHRA. And they understand the nuances of it. It makes your job easier. It makes our job easier. It makes the employer's job easier. It makes the member's job. It just is better for the ecosystem. So if more carriers would get serious about that and really, it doesn't have to be like a massive part of their practice, just something.
Just a unique
just
team.
Understand that it's different.
Understands the differences. And
and it would just make everything. It wouldn't be perfect. We're not looking for perfection. That's impossible. It would just be a better experience for all involved, including the carrier for that matter. Right. It would cut down. They would invest upfront to have a less expense on the back end, I think. So
And
that's 5 years from now, I'd love that.
I would +1 that all day long.
Yeah.
So love your answer, Paul. We've talked about it. I mean, ICHRA adoption is accelerating. I think I saw, we were talking about the ICHRA Council predicts that by 1/1 of 27, there will be 1 million employee lives
Let alone their dependents.
ICHRA,
Right?
let alone dependents. So
Yeah.
you do a 2.5 multiplier, whatever you want to say. It varies in different regions of the country, but a couple million people on ICHRA by the end of 2026. Growth is there. Like Remodel saw it this past year. I would expect and hope that we'll see it again this year. But with ICHRA, like, it's not all rainbows and butterflies. Like I tell people all the time, there's bumps along the road. You've got to work with a partner that can help you smooth out as much of those bumps as possible. But no partner is going to have just a smooth highway yet. Like, you got to lean in and kind of deal with some of the friction points that is moving to an ICHRA. And one of the main things I would say is for those that are Medicare age, like, Medicare is the only option if those individuals want to participate and receive that contribution that their employer is giving them. Now, the good news about that is that it can fund Medicare premium costs, Med Sups, Med Advantage plans that member would want, but it is still a significant change that kind of that Medicare age member has to go through. I just thought your perspective on that was great. So I wanted to ask you kind of what are some of those main kind of challenges that Medicare segment kind of faces?
It's so a lot of times folks that are over the age of 65, still working full-time and are benefits eligible, they are choosing actively to not be on Medicare and stay on the group plan. Own personal choice. They absolutely can do that.
Yep.
And then when an employer shifts to an ICHRA model, they really, unless they have a working spouse and going on their plan, they don't have any other choice but to choose the Medicare route or have no coverage at all, which is not a good deal. And so there's the emotional component of that, which I don't know that I truly appreciated till recently. Like, you're forcing me to go on Medicare. Yeah. I kind of am. What's interesting about Medicare is once you're on Medicare, the net promoter score, the NPS on Medicare is really high.
Yep.
People love it. Getting Medicare is very challenging. It's you're basically taking something challenging, ICHRA funding, and you're taking something probably even more challenging, Medicare, and you're mashing them together.
Yep.
And it takes a lot of explanation, and it takes some time, the lead time that you need to make sure you have Part A, make sure you have Part B, get the supplement. There's an order of operations, and that can be a challenge. That can be a real challenge. In addition, when somebody is past their initial open enrollment period for or initial eligibility period for Medicare, let's say they're 68 years old and still working full time, and you shift to an ICHRA, they then have to have a special form that comes from the employer that proves you've always had coverage back to. There's just extra paperwork, and so I guess I wish that friction point was not there, but I think you're taking two relatively complex things, mashing them together. Yep. And then you have the third component of, for some individuals, this can be an emotional thing that they're dealing with as, well, I don't want to be an old retired person. Well, we're not asking you to be. We're just asking you to use this tax advantage funding from your employer to go buy really great coverage. And yes, it's a change. It's going to be okay. And so I think employers, plan sponsors, advisors need to be aware of that friction point and have a really thoughtful strategy around navigating. And we've had some clients where that's gone really well, and other clients where we dropped the ball, honestly, and we're learning from it. You know, we're trying to perfect that model. Yeah.
Same on our side. Like, it's not always gone super smoothly in the Medicare side, but we would say, like, our perspective is, as we've grown and matured, like, we think about, like, in partnership with our broker partners that we're working with, like, building a separate pathway or track for Medicare education specifically, where, because the what you need to communicate is so different than the non-Medicare eligibles that are going on individual, like, in true individual plans that are off exchange versus all the things that are unique to the Medicare audience. So, like, really even, like, offering unique educational opportunities for just the Medicare segment.
Well, and I think employers can get ahead of it a little bit, which, even if you're not going to go to an ICHRA anytime soon, educating on what Medicare is and isn't to your workforce is probably of value, because they either might want to do it on their own as an option, or even while you offer a group plan, or they might have a loved one that they're, you know, like, I'm a 40-year-old and I've got a parent who is getting on a Medicare and they've come to me for help. If I had a little bit of understanding, it would help. So I think there's a value that employers as a conduit can be a conduit to Medicare education. even if you're nowhere close to doing an ICHRA, it just
Yeah.
preps everybody for good reasons of what Medicare is and what it isn't.
Yep. That's good. I love that. Paul, man, this has been a treat. Freezing cold.
Yeah.
But man, the trip.
I don't know if they can see it. I don't know if but it's not nice out there.
Yeah.
Well, it's nice, but cold.
We're recording this on a Wednesday. So I literally, like, kids were home from school Monday, Tuesday because of the winter storm. And like, this is my first day in the office this week, but man, totally worth it to get the time with you. So man, I just want to say thank you for being our guest, talking shop, talking all things health insurance and ICHRA. And man, you're one of the best in the business. So just want to say thank you. And also wanted to talk about like a interesting opportunity. If you're in, now we know we've got national listeners. If you're in the Midwest,
they can fly in.
But NFP Indy's actually got a really cool event coming up March 11th.
Yep. It's a Wednesday.
Downtown Indy, actually at Gamebridge Fieldhouse, which is where the Indiana Pacers play.
And Fever.
May
have heard of them.
Right.
Caitlin Clark.
The
Caitlin Clark effect.
Gosh, yeah.
She'll be back.
Good job, man. Yeah,
She'll be back.
Caitlin Clark, she's man, so good.
Yeah.
But anyway, we have that event coming up. Remodel Health's actually excited to be a sponsor.
Yeah.
As part of that event, I get to be a panelist in a session at that event, so I'm super excited about that. So anything else you wanted to say just about NFP Resolve?
Yeah, we've been doing Resolve for, I don't know, pushing 20 years, and it continues to get bigger and better every year. The venue is going to get a little smaller this year. We were in Lucas Oil. I'm actually looking at it out that window last year. So we've gone to some cool venues. Gamebridge is a little more intimate, but a great world-class basketball arena. So we're going to be there. The opening keynote is actually a panel. It's going to be women in sports that are involved with women's professional basketball, like the Fever, volleyball, the new volleyball professional league that's come up in the United States, and what the impact of there's actually a professor from IU Indianapolis that has a class that all it talks about is the Caitlin Clark effect. So what's happening with the growth of women in sports and what it means to the local economy. So they're going to be the opening keynote, kind of just something it's not Total Rewards related, but it's interesting.
Yeah.
So they're going to be there. Then we have a bunch of breakout sessions where we go deep into topics that are related to Total Reward. So you've got the ICHRA one. Where we're going to talk about compensation trends. We're going to talk about executive benefits, lots of different things.
Yeah.
And then at the end, we have a female Olympian that's coming in, a two-time gold medalist who played on the U.S. women's soccer team, suffered a career-ending injury, and talk about her journey with sports and business as an entrepreneur. So whole day event ends with a nice opportunity for a happy hour at the end, lots of connection time. And so we'll probably have 350 attendees. It's not a small conference. Cool venue. If folks want to learn about it, they can go to resolveindy.com and they can look at the full agenda, details, and hope they can make it. But tickets are still available. Going fast, but tickets are still available.
Man, love that. You just made me excited to be an attendee.
There you go.
Let alone my little panel session. So
well, and thank you guys. We can't do it without our sponsors. So you guys are one of the presenting sponsors, which is a pretty high tier. There's one title sponsor and TrueRx, the Transparent PBM. So they've been our title sponsor. I think this is their fourth year in a row. You guys have stepped up and a presenting sponsor, which is just, we can only have one title sponsor. Sorry. You guys can fight over it next year.
Next year, yeah.
You fight over it. You can arm wrestle Adrian from TrueRx. But just thank you so much because we could not pull this off without partners like you guys sponsoring and so excited to see your content as well.
Oh man. Well, thank you for being our guest today, Paul.
My
Really
pleasure.
enjoyed it, man. All right. Safe travels.
Thank you.